Happy Sunday to everyone. Let us have a short prayer. Our Lord and our God, the King of glory, the Alpha and the Omega, the one in whom we live, we move, and we have our being, the resurrection and life, we just want to say thank you. Thank you for the grace to be alive. Thank you for the gift of life. Thank you for good health. Thank you for your love. Thank you for your protection always. Thank you for giving your angels charge over us. Thank you for the grace to be in your presence this morning. Heavenly Father, we have come to learn again at your feet. My Lord and my God, we welcome you, Holy Spirit. We pray that you will teach us today. Beyond our preparation, we pray that you will open our heart of understanding and deposit something of eternal value into our hearts. We have come empty. Father, that which you want us to learn from this talk today, instill it in our heart, O Lord, and let us be a better person, O Lord. For in Jesus' wonderful name we have prayed. Amen. Amen. Good morning, church, again. And you're welcome to our awareness Sunday. If I'm not mistaken, I think this is about the second or third we'll be having. And then we had one sometimes ago in October when fourth one. When we had the last one we had was sometimes in October when our deacon took us about credit and everything we need to know. Fantastic. It was well dealt with. And this is just a follow-up from that topic because it's something that we need to know. It's something that will benefit us. It's a good foundation, to step up into what we want to talk about today. Our topic today will be on mortgage. It's just to enlighten us and to encourage us and to open our eyes into what mortgage is all about. But before we start, I just want to say something very briefly. We live in a country where everything is regulated. I want to say that I don't have a license to give advice on mortgage. Somebody who is a qualified broker is someone who is licensed to give advice on mortgage. I am just a little boy who just want to share one or two things. I'm just one of the members of the awareness team that have volunteered to take this topic up and share one or two experience and the very little knowledge I have. I'm 100% sure that there are people seated here who are more qualified, who knows better than me, who has more experience, who are better in this topic. But the aim of this topic is to encourage and enlighten us about mortgage. I want us to I'll just read one or two Bible passages to buttress my point before I go further. In Deuteronomy 11:24, this is God speaking to Abraham. He said, every place where the sole of your feet shall tread upon shall be yours. And also in Genesis 17:8, he said, I have given to you and your descendants after you the land in which you are a stranger. We all claim the blessings of Abraham. And I'm sure we remember the story that when God asked Abraham to leave, Abraham went to this new location. He was a complete stranger. And the Bible also recorded that Abraham was wealthy. He started small, but he did not end up small. The Bible recorded that Abraham was wealthy in livestock, in silver, and in gold. We have all started one way or the other as a stranger, but we will not end up as a mediocre. The Lord will turn our situation around. We have come empty. Some of us only came with 232 kg as our luggage. That when we are going back home, 40-foot container would not be enough for us. And that is why we want to open our eyes and encourage ourselves. What are those things that I need to do? Some of us want to probably retire back home. Do you want to go back home with the same 32 kg luggage? What are those steps? God forbid. What are those steps that we need to take? And I pray that as we journey into this topic, God will give us a better understanding. Now, our topic today again, it has to talk about mortgage enlightenment. What is a mortgage? A mortgage is a long-term loan from a lender, which is usually given to buy a property. It could be land, it could be flats, it could be a whole house. So the lender borrows you money to buy a property, and the agreement is that you will make a monthly payment from the loan. Of course, there will be interest element that will be added onto it. Now, before you talk about mortgage, before you talk about what do I need to do, how do I apply, there are some factors that needs to be considered before applying for a mortgage. One, you must be self-employed, or you must have your own business. You must have saved deposit. The deposit range could be a minimum of 5 to 10% or upward. Yes, of the value of the house. You must have a good credit. Lenders must trust you before they lend you their money. Don't forget it's their money. Like I said, it's sometimes in October last year, I dealt very well with that topic. You did excellently well. If you were not here, I will advise you to go back and listen to it on how to manage your credit, on how to protect your credit. And it's also advisable that if you want to apply for a mortgage, it's good not to apply for any credit card or any loan at least 6 months before you start that process, because the lender wants to look at your affordability. If you have so much debt before you apply, when they assess you, they will look at all your owings, all or everything. You still have so much debt, you still have too much debt, and yet you still want to take this debt of mortgage on. So it's advisable that you try to avoid taking any credit card or anything before you start your mortgage application. Lenders look at your credit profile, that is your credit history. Sorry, this thing is always cutting, to see if you are a good lender. Lenders are looking at your affordability. If you have a lot of debt, sorry, thank you, sir. Lenders will assess your finances, e.g., your affordability. They will borrow you. Typically, they will borrow you 4.5 times your annual income. That is what is expected to be borrowed, and that will give you a guide on the houses you will look for. They will also check the property that you want to buy. So how they will look at your income and basically come up with at least 4.5% of your annual income. Mortgage is a debt in its own case. If and Once you sign that agreement, you have to keep to it, because once you fail to pay your mortgage, then won't stand the risk of the house being repossessed. So my advice is cut your coat according to your size. Everybody wants to buy a beautiful house. You want to buy 4, 5 bedroom house. You have garage. You want to have a drive-in, but start small. Rome was not built in a day. The aim is just to get on the property ladder. You can start with a 2 or 3 bedroom basic house. After 2 or 3 years, by God's grace, your situation will have improved. Then you can now talk of getting your own dream house. But the most important thing is to stop being a tenant. Once you're able to meet all these criteria that we've talked about, the next step will be think of where you want to buy the property. Do you want to buy the property in London? Do you want to go to Maidstone? Do you want to go to Canterbury or Ashford? The location, our pastor wants to go to Chelsea. So the location really matters. Property in London is seriously on the high side. The average property in London is about 600,000. In Kent, it ranges is around 300,000. So you look at how much am I earning? What is my annual income that the bank will borrow me 4.5% of it per annum? Can I afford to buy a house in London, or do I still want to, you know, stay in Kent where my affordability will allow me to get somewhere? So when you look at all these things, you will you will consider so many factors. And what are those things? Where are those on the online? How to check where you can actually see the prices of property? You can make use of tools like Rightmove, Zoopla, Home.co.uk, Prime Location. And when you look at all those locations, it's always very important that we find the right development. What I mean by the right development is that if you have an idea that fine, maybe you settle down in Chatham, but you don't like Chatham, you prefer a place where it's posh, like there are some outskirts in Chatham that are very good, like Lord's Woods, Waterslade. They're very, very posh, very quiet, but there are so many factors you have to consider. You like the environment. The most important thing you have to think about is what are the social amenities there? What is the transport network? Are there good schools for your children? What is the crime rate in that area? Is the area a noisy neighborhood? The distance of the train station to Lostwood is quite far. You have to be mobile for you to live there. It's quiet, it's lovely houses there. Even the houses there are quite they're not that expensive. But you have to consider all those social amenities. I remember a family friend of ours who she lives in London. A few years ago, she said she's tired of London. She wants to come to Kent. So um, she went to view a house. She loved the house, and she put in the bid, and the bid was accepted. I think it's somewhere in Sheerness on Sea. And she was happy that they've accepted her offer. So she just decided to drive down to that location on, I think it was on a weekend. And when she got there, she said what she saw was not what she was expecting. I guess when she went to view the house with the agent and they accepted her offer, it was probably on a weekday when there was no school, whatever. And when she went there on a Saturday, he said the place was as if there is a nursery school behind that. All the children were riding bicycle. It was noisy. She said she drove round again and she came back and said, "Is this not the same quiet street that I came?" She said immediately she had to call the agent and said, "No, I'm changing my mind. I'm no longer interested," because she was coming from a noisy place in London and coming back here and seeing kids driving bicycle, noisy area. She said no. So it's very, very important for you. Just don't rely on going there on a one visit and make up your mind. Go there on a weekend, go there on a weekday to understand the environment. Things to note during your online search. There are some various categories of houses we'll see. Like you see some when they say a house is a freehold. What does it mean for a freehold? A freehold is when you buy the land and the building on it. You own everything. That is what freehold means. Some houses, you see them, they will say they are leasehold. These are terms that you need to familiarize yourself in the course of our search. Now, for leasehold, you only own your flats. Most flats are leasehold anyway. You only own the flat. Some houses too could be leasehold. You don't own the land on leasehold, and it is usually fixed for a certain number of years. When you buy a leasehold property, there are other charges that comes with it. That's like charges like service charge, ground rent. A good example is the flats just by Four Continents store. If there's any repair that has to do with the communal area, they will charge it to everyone. even if you said you have bought the house because it's on leasehold. If you live in a block of flats, when they repair the lift, they would give you your own portion of the bill, even though you said you have bought the house. So leasehold is something that is not 100% your own. This is something to note. Now, there are other categories of property you will see. They will say for sale. They will put over 60. Over 60 property are sold to people that are over 60 years old. They are sold on leasehold basis, and their market value is always reduced as compared to the normal freehold houses. The other category of houses you will see when you are doing your search for a property is called share ownership. A share ownership is when you buy a certain percentage of a property. You've seen a property that you like, and the opportunity is there for you to buy a certain percentage. So you probably go and get a mortgage. The deposit is not always that much because you are not buying the whole house or the whole flat. You will go and get a mortgage to buy. It's always between maybe 10% to 75%. They won't allow you to buy everything. Under shared ownership, maybe you can afford a 100% mortgage or 90% mortgage. So you could buy, say, 50% or 20% under shared ownership. So you go and get a mortgage to cover the 20% you want to buy. But in this case, you are still paying rent on the remaining balance. This is something to note. Some of the features of share ownership is that you purchase an initial share of the property, usually between 10 to 75%. You get a mortgage to cover the cost of the share you are buying. You pay rent. You pay rent to the housing association or the council, and you are responsible as well to pay your mortgage. And you are also responsible to carry out repairs in that property because you bought a share ownership. The other category of houses you will see that is on sale is auction property. Buying property on auction is about the easiest and the fastest way. If you start the process of buying a property via mortgage or whatever, it takes time. It could take 3 months, it could take 4 months. It does take time. But auction is about the fastest way of buying property, but it requires that you must have your cash. You must have your cash. And with auction, you will have gone to view the property, and then on a particular day when they want to auction, you could do it. Most auctions are now done online, where you just submit your bid. Once you win on that very day, they will send you an email to confirm that you have won. And in the email, you are expected to pay within 24 hours. You're expected to pay 10% of the value of the house. And of course, you will see the auctioneer fee that you have to pay. And they will tell you that the transaction needs to be completed within 28 days. That's the duration for auction. Once you have your money, you could buy a house on auction. You don't need to do any credit check. You could have the worst credit check, but once you have your cash, you will get the house within 28 days. And if you win, you pay the 10% on the day of auction. And 2 weeks after, you say you are not going back, you are not going forward, you don't want to, you are no longer interested, you are liable, they will take you to court. That is part of the condition. Auction property are mostly property that requires renovation, that requires one or two things. They are not that common, but it is the fastest way and easy way to get onto the property ladder to buy your property. Now, when you now see the property you want to buy, there's need for you to do your due diligence. You've gone to check the property. You see it online. They send photograph and everything. Sorry, onto you. What are those homework that you need to do? Even when you go to view, before you make your offer to the agent, there's need for you to research on similar houses on that street. before you go ahead. They could say a property is 200,000. Find out on that same street, in that same location, what is the average cost of the 2 bedroom or 3 bedroom house you want to buy. Look at the average cost of the houses that was sold maybe in the last 1 or 2 years. That will give you an idea of the value of the property. And another important thing is this: you can look up the property on on HM Land Registry. Very, very important. I think there's the fee of about £7. Once you put the postcode and the address, you can look up the history of the house. And once you see all this information, it will guide you if there's any restriction on that property, on what you can do. You may have it at the back of your mind that, oh, if I buy this property, I'll do an extension, I'll do this, I'll do this. But all this information will be stated when you check further, when you do your own homework on the HM Land Registry. You will see if there's any restriction on the property you want to go for. Very important. Now, I know a lot of us some of us are renting, some of us are buying. And there is need for us to look at what are those disadvantages of renting. Some people are comfortable renting. They say, oh, I don't want to tie myself down in 25 years, paying mortgage for 25 years. How many years do I have? That's some people for you. Of course, everything that has advantage has disadvantage. So let's just look briefly at the disadvantages of renting. Number one, you cannot make any alteration to the property. You will need permission from your landlord to do certain things. And it's so bad that I remember when I was renting, I had to speak to the agent that, look, can we, most of the doors in this country, they don't have lock to the room. I said, for privacy, at times when we are going out, we have guests. I just want to lock my bedroom. Can I do lock? I'm not asking that you pay. I would pay for it myself. They said, no, you can't do it. I said, but I'm going to pay to do lock, just to lock your room. They said, no. So when one is renting, you cannot make alteration to your property. When renting, you are paying almost ×2 what you should be paying as a mortgage. When you are renting, you do not have the right to buy the property. You do not have equity on that property. We'll go into the meaning of equity later. No matter how long you've lived in the property, you do not accumulate. Whatever you are paying does not accumulate into equity on the property. The landlord can choose to increase the rent or evict you at any time. If you are renting, you are helping the landlord to pay their mortgage and build their portfolio. My prayer this morning is that this teaching will be a wake-up call. It will stir us something in us for those of us that are still renting, that we need to start working towards getting our own, because the disadvantages is just too much. What are the advantages if you buy your own property? You have stability, you have control, you have no stress from the landlord. Once you are able to step on the property ladder, you have a fixed amount that you pay on that property. You could fix mortgage for 2 years, for 3 years, for 5 years. But at least within that period, you are rest assured that there's no rent increase. You are rest assured that there's no landlord that will come and embarrass you. The only condition where there may be difference in the amount you pay is if you've done variable interest rates. With variable interest rate, there could be changes in the interest rate that could affect how much you pay. So you have that stability and rest of mind. You'll be paying less in mortgage as compared to when you're renting. You can sell that property and move to a bigger one. You can make alteration, you can make expansion. Some people have lofts, some people can decide to say, okay, fine, I want to do a conservatory. You can do whatever you want. There are certain things that you need permission from the council to do. But at least you have that freedom to do so many things within your house. As a landlord, the property will gain capital appreciation because over time, the property will appreciate in value. You can borrow money on that property and use the fund to invest in another property. And don't forget that when you buy a property, you are building a generation wealth. You are building a generational wealth. Please, 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 and please. I know where some of us are still trying to find our feet. I will encourage that we work towards it. I was very comfortable for several years. I'll just give you my own a little bit experience about what we went through. We're very comfortable renting for years. There was no issue. The landlord was not stressing us. After just suddenly she just came and she said, um, the council. This was somewhere in London. There, he said the council wants to buy the property, and they made her an offer, and she had decided to sell, and she wants us to leave. And there was so much pressure that she gave to us. And who are you to argue with your landlord? Eventually, we had to look for another place. We got another place, and when we moved to the place, try and remember now. When we moved to the place, within 6 months, they increased the agent increased the house rents. We had settled down. My daughter's school was just about 3 or 4 minutes walk. They increased the house rents. Fine, let's continue. Within a year, they came to us that they wanted to sell the house. And I'm thinking, what is really happening? And the inconvenience that we went through then, I pray nobody will go through it. On Saturdays when we were at home, for every Saturday during this period that we put the house on sale, Saturday you want to tidy up the house, you want to, do so many things. You will have nothing less than, and I'm not exaggerating, 9 to 10 people coming to view the house. And when they come to view the house, is that when you want to start cooking? The agent will come, bring somebody from 8 to 8:30. There will be another people coming from 8:30 to 8:20, up till 1 o'clock every Saturday. And there was a time I was at work, I just checked the house. You saw our bed sheet on the online display. You saw, I said, what is the meaning of all this? You saw your kitchen and everything. I said, what is this? You are handicapped because it is not your house. There's nothing you cannot do. So they now said they've gotten somebody to buy. It was a flat, somewhere in New Cross, if you know New Cross, towards Lewisham in London. So they said they've gotten somebody to buy the house. So I now said, we've been here for barely 18 months. Now we need to move again. Start looking for school. Where do we start? Few months, 1 or 2 months down the line, they now said, oh, the person has pulled out. That the person's mortgage did not scale through. That was when I called my family. I said, enough of this. We need to start doing something to get our own. We wouldn't want to go through this thing. They failed the first time. That could be God telling that, look, you have to move. You have to move. So it was very, very uncomfortable. And, God helping us, God helped us. That we're saying, before you get somebody else to buy this house, we will have gotten our own. But there's need for you to prepare. There's need for you to save something by the side and start working towards it. I will strongly advise that once you are financially ready, please go ahead. After deciding where to buy the property, you need to know how much the lender can borrow you. Very important. We've talked about looking at your income, that the lender can borrow you at least between 4 to 5 times of your annual income. And you stand at a very good advantage when both of you join forces together. That is when husband and wife forces together, it will boost how much the bank is going to borrow you. And you need to have, deposits like we highlighted earlier on, at least between 5 to 10%. Now, if you want to buy a house, You can walk into your bank. You have that option of walking to your bank and speak to your bank that, look, this is my situation. Can I borrow? Can I get it? Because all banks have a mortgage department. But the risk there is this: the bank will only sell their product to you. The interest rate, the condition of Barclays Bank will be different from NatWest Bank. NatWest Bank will be different from Lloyds TSB. So it is advisable for you to get a broker. Speak to a broker. The broker will help you. They will act in your best interest. We'll get to the advantages of broker. There's what the bank or the broker will do for you that will give you an idea of the next step to take. That is what is called an agreement in principle. An agreement in principle is a document from the lender indicating how much they can borrow you based on your finances. That is based on your income. Now, when you are able to get this agreement in principle, when you speak to your bank or when you speak to your broker, that does not guarantee, and you're able to get this agreement in principle, some people call it mortgage in principle. That does not guarantee you acceptance. It is just a means that you have been approved in principle by a lender. The agreement in principle will only let you know your affordability. That is how much property you can afford. If you are aiming a property of 600,000, by the time your agreement in principle come out, you know that you have to cut yourself according to the quote of your agreement in principle. The bank will lend you based on your income. And once you're able to get the agreement in principle, it's not just forever. The validity of the agreement in principle is for 90 days. So within that 90 days, you need to get an agreement in principle. I have a family friend, my family friend, when he was renting and, somewhere in Chatham here, and he was not happy with where he's living, damp and all the rest. So he went to this housing agent just opposite the post office in Chatham, asking that he wanted, looking for a house to rent. And they were asking him how much was he paying. So he told them how much he was paying monthly. And they said, fine, if you can pay this much, why don't you go and buy? So he said, okay, you mean I can go? Fine. I mean, I'm talking about 2, 3 years. So they encouraged him to start. So he started that process. But when he went to his bank, I don't want to mention the name of the bank here. So when he went to his bank, the bank said, fine, we can see that you earn so much, you and your missus, once you combine your resources. But because of the visa you have, they can't, I think it was less than 3 years in the country, that they can't give you a mortgage. That, that restriction is there. He was a bit discouraged, but he went away. After about a month or two, he just called me. He said, they've introduced him to a broker, and a broker have told him that he should bring this, bring this. So he was updating me along the line. And eventually, they were able to get him a lender that could lend him, even with his stay in England less than 3 years, and he was able to get a mortgage. So what I want to say is this: ask questions. Don't just restrict yourself to a no from somebody. There is always an option somewhere. There is always somebody that will guide you. What some lenders will say no to, that bank said no to him. But he was able to get a broker that was able to get a lender for him that eventually got him a house. He has a beautiful house in Raynham today. So don't just zero your mind and take the no for a no. Now, the services of a broker is very important. You need to get one. A broker, who is a broker? A broker is a financial intermediary who connects the borrower to the lender. What the broker will request for you, they are probably going to request about 3 or 4 things. They will request for your pay slip, they will request for your bank statement, and they will request for your proof of ID. Those are the things they want to look at your financial situation. A broker will give you expert advice as they have access to a wide range of lenders. Unlike when you walk into a bank, that the bank will only sell you their product. They have a deeper understanding of the market. They help you find mortgage with a better interest rate and more flexible terms. They reduce the risk of rejection. A broker will assess your financial situation and will only submit application to lenders whose criteria you are likely to meet. They help to get a lower interest rate and help you simplify the entire process. Currently, the last time I checked, about a few weeks ago, there are about over 340 regulated mortgage lenders in the UK. When we talk about regulated lenders, they are different from the Barclays Bank, NatWest, Lloyds, and all the rest that I will see. There are several that you've not even heard about their names, over 300. The broker have access to check which one will suit you. And their fees is not that much. Years ago, it used to be 300. It could be in the range of about 500 now. But the benefit outweigh you walking into a bank for anything once you're able to get a very good one. A bank will only, like I've said, the Bank of England rate currently is about 3.75. That is the base rate which other banks will lend you. It can't be lower than 3.75, but the way things are going now with the crisis, the rates is skyrocketing. We pray that there will be stability. But it's very, very important that one get the services of a broker. Now, we talked about equity earlier on. You must have been hearing about equity and all the rest. What is equity? Equity is the portion of your home that you truly own. And how is equity calculated? It's calculated as the property market value minus what you still owe on your mortgage. I'll just explain in a layman's way. If you bought a house for 200,000 5 years ago and you are doing your monthly repayments, and as you are making your monthly repayment, your owing in the bank will reduce every month. You bought it for 200,000 5 years ago. Now, it's now 5 years. If you now look at the market value of the house, obviously it's not going to remain the same. The property you buy 5 years ago in 200,000, you could have increased to 300,000. Now, you now look at how much left that you have paid. Don't forget, it's a loan from the monthly payment you've been making. Let's assume from your monthly payment that you've been making in the last 5 years, you are now left with about 150 from the 200 that you bought it. And the market value of the house is how much? Is now 300 from the 200 that you bought it. So the equity you've built on that house is how much? Is 150. It's 150. So that is the trick of the market. So people can say, okay, fine, I built equity on this. You can walk into your bank or speak to your broker. Broker, I have an equity. You can easily find out the current value of your house. If you've built so much equity, you can release the equity on that house and use it to go and buy another one. Not everything. There's something they will call loan to value. It is a percentage of the equity that they will release to you, not everything. There's a way to call it. But if you decide to sell and say you want to go back to your village, they will give you whatever because you've been able to build your equity. But that is how people multiply their houses. I was speaking to somebody the other day, a colleague in the office. They've lived, God will help us. They've lived in the house for 18 years. When she bought the house with her family, they bought the house for 250, and they sold it a few months ago for 600. I said, how much again? She said 600. And with that money, they bought 2 houses. There's no juju in this thing. You just have to start. Please, we just have to start. This talk is to enlighten us, is to encourage us. Last year, October, I had an issue with my boiler at home. So I got somebody whom they recommended to me to come and help us. So he did the boiler. He was there for 3 days. And in our course of discussion, I said, do you know this area? This is where you can buy this. He wanted to buy some parts. He said, are you telling me Chatham? He said he knows Chatham very well. He said he has a client here. He said he has one woman here who he comes, he's a plumber, he does boiler and everything, who he comes to service the boiler in her houses. She said she's in Nigeria. She said, no, she has about 7 or 8 houses. I said, what did you say? NHS staff? That we are all complaining? He said, 7 or 8 houses. She must have started somewhere. It's a wake up call. The same place that people are complaining, people are making good advantage of it. God will help us. Now, the first step is to raise deposits. We're talking about 10% or 5%. The more, the better for you. Because the more the interest rate you will even get, and the more money you're able to put down, the lesser you will pay in terms of your mortgage repayment. How do we raise deposit? For first-time buyers, it's advisable that you look up at government scheme that can help first-time buyers to get on the property ladder. There are so many government schemes out there for first-time buyers. They want to encourage people to buy. Create a budget to track your income and expenses and look at areas where you can make a reduction in your expenses. The goal is to save, 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 and save for you to be able to get enough deposit. You have to be financially disciplined. It is not everything that you see that you buy. If you have all this useless app on your phone, Temu, Alibaba, Shein, look at how much you are wasting every month. It adds up. It does adds up. We're just accumulating junk. But at the end of the day, look at how much we are saving, how much you are wasting. If you know you are struggling financially, you can do a job, all this contribution. You know you have a goal. It is not for you to take it and go and buy trinket in Dubai. No. You know you are saving towards buying your own house. Take up a part-time job, a side hustle, that you know that whatever salary I'm getting from this house hustle, I'm saving it towards my deposit. If you are currently renting a flat, this is optional. If you are currently renting a flat and you think that, well, you are renting a 3-bedroom flat, because there are times that the rent you pay for a 3-bedroom flat, there's very little difference between a 3-bedroom flat and a 2-bedroom flat. You can rent out a room, downsize. You know it's not going to be forever. You are just sacrificing for a while. Rent out a room, whatever money, keep it aside. Your rent is still the same, but that small room you are renting, keep that money aside and use it as a saving towards your deposit. And if you already own a house, you can release the equity on the house, like we said, to buy another one. Now, we know that some of us we're still struggling with our immigration status and asking ourselves, should I buy a house when my immigration status is not perfected? It's a big question. My personal advice is this: ask questions. You can't continue to be a tenant. Housing is a fundamental need. Everyone needs a place to live. It's either you are renting or you have your own house. But I still believe it is better you have your own house. Don't let your immigration status discourage you from buying. If once you know you are on a clear path to perfecting your papers, I will advise you to go ahead and get on the property ladder. If you have to relocate back home, please, you can sell this house, the house that you've bought. A friend of mine years ago, when he was living in London, I remember their case 100%. Where they were living, the landlord of the house, one old Ghanaian couple, they will come maybe once in 2 years. They look at the house when they're on holiday in England, and they go. And they were still receiving letters, correspondence in the house. And I remember my friend would say, why is the landlord still collecting letters in the house? Why? And the wife will say, what has that one got to do with you? Do you want them to ask us to leave again? You know, there are ways that a poor man will want to get angry overnight. The bottom line is this old Ghanaian couple had bought the house about 15, 20 years ago, and they had relocated back to Ghana. They will only come on holiday once in a while, look at the house. They are earning pounds from the house they bought several years ago, and they are spending CDs. So which one is better off? There's a time one has to sacrifice. We're all working towards our old age. We don't want to continue to work, and work. Let us start doing something that will give us passive income. A passive income is an income that you earn when you are not there. Make money when you are, let something be making money when you are sleeping. I think it was Warren Buffett that says that if you do not think of how you'll be making money when you are sleeping, you will work to the end of your life. This Ghanaian couple had paid their dues. The house is there. They can decide to sell. But they will just come and, collect house rent, and they're enjoying themselves. How many times have you seen your landlord in your house? All he does is to check his phone, the alert. Have they paid? Who is doing the extra shift? It is me and you. God will help us. So once you know that you're on a clear path to your immigration status, I will advise that you start thinking about it. Let's start planning beyond our ILR. The ILR will come. Either 5 years, either 10 years. Let's have a plan B by the side to be on the property ladder. Age is not a barrier to buy or invest in property. Your age should not discourage you. It is only late if you've never started. I have a friend who is well over 60. He bought a house. He bought a house last year. 100%. I know everything about it. So it's not a barrier. Applying for a mortgage when you are over 60. The only restriction there is that lenders may restrict. There may be some restrictions as compared to when one is younger. Applicants over 60 years, they see them as close to retirement, and they start asking how many more active years do they have. If you have to go ahead, some lenders will restrict the number of years. They could say maybe 10 to 15 years as compared to the typical 25 years. But I will advise that the earlier one starts, the better. But age is definitely not a barrier. The younger you are, the better your chances of getting a good deal. Now, fees to consider when buying a house. We've talked about you working towards your 5% or your 10%. Other fees to consider is the stamp duty. What is stamp duty? Stamp duty is a stamp by the government levied on the purchase of a property. So the amount you pay in terms of stamp duty would depend on the value of the house. Currently, you pay a zero stamp duty if the property is less than 300,000. If it's more than 300,000, that is when the stamp duty will apply. And you also pay legal fees and like we talked about the broker fee. But the chunk of the money you need to save is the percentage, is your deposit on the house. But we need to be aware that if your house is less than 300,000, you don't need to pay any stamp duty, especially for a first house. Tip to avoid before buying a property: do your due diligence. Look at the average property prices in that location. Don't allow the agent to talk you into bidding higher. If possible, if one is just starting afresh, you can buy property below the market value. Property below market value are property where the house needs some renovation. You can start with that. Once you start with that and start doing the renovation bit by bit, but at least you have stepped out from the bondage of renting. God will help us as we do this in Jesus' name. Now, what are the tips to paying off our mortgage before 23 years? A lot of people think when it's tied down for 23 years is this. It's not in all cases. You can pay off your mortgage by paying more than the monthly mortgage, more than the monthly repayment. Let's assume your repayment is 1,200. If God blesses you, You can decide to put extra £100, extra £150. With that, you are reducing the number of years and the number of loan you are owing the bank. If the property is in a good location, you can rent out a room. It is your house. So you don't need any permission. You can rent out a room. And I read something in the papers where somebody actually made money from the frontage of their house. You know, when you live closer to the maybe town center or train station, there's parking restriction. There's a website that people advertise that you can park in front of their houses. People that live here and maybe they still work in London, and because there's no parking anywhere, people pay to park in front of people's houses. So if your house is in a location whereby you can rent out your parking, people that are going to work to the train station, they can pay for parking in front of your house. There was a particular man, he said he made over 2,000 in a year for allowing people to park in front of your house. There's a website that one can use to get where you can park in front of their house. And peradventure, if you think where you are living it's expensive, you can change your location. Now, the other thing I would just want to touch on now is that for investment purpose, for those that have one house already and they want to do to maybe multiply the number and buy another one, there's always a shortage of accommodation in the UK. As we know, UK is just is an island. The population is growing, and people need where to stay. If you decide to invest in property, the market is there already. You don't need much advertisement. There's always people that needs houses. I remember my junior sister when she relocated years ago. She just called me and said, brother, I saw a place where they put A4 paper just in front of the gate by Victory House High School there. They just put house for rent. Just they didn't put it on website anything. Just a sheet of paper like this. And we went there. We called the number. Alas, we went to view, and we ended up renting the house. They ended up 3-bedroom house. But what amazes him now is that when we went there and we saw the landlord, two Asian guys, very young. If you see them, the car they brought, oh my, you won't you won't think that they can afford it. They live in London, they've come to invest here. So what I want to say is that you can partner with somebody if you know you can't do it on your own. The market is there for those that want to invest. The only prayer one pray is that one will get a good tenant that will not default. But location is key for investment purpose. When we talk about location for investment purpose, there are 2 or 3 areas that I advise strongly. That's it's a win-win situation for investment purpose if one really wants to invest in property. You can buy a property in a place where it's close to university campus. You have university students flocking the area, and you make more money when you rent out room by room. You can buy a property for investment purpose where there is NHS hospital. Nurses want accommodation. Doctors want accommodation. These are people that don't lose their job. They want to walking distance after I had this job from house to work. You will always get your money there. One can also buy a property for investment purpose closer to a train station where you don't have to take a bus or whatever to do wherever you're going. Like I said, partner with somebody. The bottom line is trust. Do your due diligence, do all the paperwork. Once you partner with somebody, if you know you can't do it on your own, you can do it. And when we talked about property, everything is not 200,000, 250,000. You can decide to go to a location where properties are not that expensive. Northeast of England, places like Sheffield, Middlesbrough, Leeds, Sunderland, a 3-bedroom house there, you can get one for 65, 70,000. 2, 3 people can come together. Let's do a job. Whatever we do, that should be enough for maybe 20 or 25 or even 30%. Let's buy a property and rent it out. Sleep in your room and let the tenant be making money for you. God will help us in Jesus' name. Property investment, to me, is the best form of investment you can have. It is better than pension. Years ago, pensionable age was it 62 or 63? But they keep on shifting the goalposts. They keep on shifting the goalposts. I think it's about 67 now. Tell me, how many more years do you have to enjoy the money at 67? So it's a wake-up call for those of us that are still young, that you don't have to start focusing on pension. Some people work just because of their pension. That is, it's a food for thought. Now, the other advantage of property investment as compared to maybe other investment like stock, property is the only business where you will only put down 25% of the deposit and the bank will borrow you the rest. But the growth of that property, whatever growth in terms of rental income or whatever, belongs to you. But if you look at other investment like shares, you have to buy 100% and pray that the company will do better. Historically, property has always, the price of property has always gone up everywhere. The percentage of increase could be different. In London, the price of property doubles every 10 years. In Kent, I don't know the percentage of increase, but it does not remain the same anywhere you go to. So it's a very form of investment. So I would say, please ask questions. Speak to people that have gone through that journey before. Don't lock yourself up that saying, I can't do it. Start thinking, if this person can do it, what stopped me from doing it? People have bought houses within 3 to 4 years of their relocating to this country. They have done it successfully. Get good advice. And I pray that God will guide us as we take this bold step. And our prayer is that after today's topic, because I want to give room for question and answer, that something would stir that thing in us that it is time for us to start thinking towards it and commit it into God's hands. That God that have done it for others